We're really glad that you're able to be here to chat with us today on Mindstock Talk, Jack. And we're very excited because we know that you have a lot going on and we're dying to get a sneak peek at. And just one thing to note, we are just starting to learn a lot about royalty companies. So if you could quickly outline what would make Globex different than other royalty companies.
Sure. Well, the biggest difference is that the way we get our royalties. Most royalty companies buy their royalties. They raise money in the market, then they go out and identify royalties, and then they buy them. We get our royalties through deals that we do. What we do is we acquire properties, and then we upgrade them to a point where the value of the property is evident. Then companies come to us and they pay us to earn an interest in the property. And at the end of the story, if they're successful, we end up with a royalty. So it's a completely reverse situation. And currently we have about 102 different royalties.
Jack, the other thing I'd like to ask you about is your history in mining and how that got you involved in starting up a royalty company so long ago. It's a very exciting story. I'd like our viewers to hear it.
We started the company almost 40 years ago, 1987. Actually, as brilliant we are, we started the company in the crash of 87. What the hell? This business, something special. So we succeeded in doing a $500,000 financing. We had one property, and we've built up over time to the point now, including the royalties, we've got over 248 projects. So
wow, that's amazing. So therefore, from that year then on, you would, I guess, wait out what was a bad market at the time, and then have gone through a number of business cycles in the commodities world.
yeah, I mean, our attitude is a little bit different than other ones. I love bad markets and I love good markets. I love bad markets because other people tend to drop properties that they've spent a lot of money on and found things of interest because they had no choice. So we acquire them generally by staking or by very, very cheap purchases. And then in the good markets, we get to sell them or do deals on them option deals because other companies are looking for assets. So good or bad, we're busy.
So I'd ask you then at this, where do you think we are in the cycle right now?
God, if I knew, it's, copper prices up, gold prices up, junior stocks are generally not up. Majors are up, but they'd already come down. So they're recouping ground. I like to think we're bouncing off the bottom, and that things are going to be getting better over time. The gold did a solid gain. I mean, if you look at a year, gold is over $300 up. So, I think that we've come off the bottom. I'm pretty sure things are getting better, but in all honesty, I don't know. And whatever happens, we react accordingly.
We're just curious about a few of your projects, in particular, the Lac Escale and the Dalhousie projects, and how will these successful projects keep Globex moving forward?
Well, hopefully there'll be a mine. That's the end game, really. But the one Lac Escale, we did a deal with Brunswick Exploration. It was a 5-year deal, and the very first drill holes that they drilled, they hit. Like 24 meters at 2.18 lithium oxide, 10.6 meters at 3.28% lithium oxide, 37.2 meters at 1.8% lithium oxide. So, they hit so many big intersections of great grade that they just said, you know what, this is a 5-year option. We're going to pay you the full 5 years. They paid it all within the first 9 months. So we got all the shares, we got all the cash. So now it's a royalty company. Dalhousie, it was a nickel property. It still is a nickel property. The company that took it on originally for nickel. But in their search for the nickel, and there is nickel on surface showings and in drill holes, multiple drill holes, they came across outcrops of lithium oxide, spodumene. And they got up to, in grab samples on surface, up to 4.45% lithium oxide, really high grade. So both of those properties are giving great results. And hopefully the Dalhousie one, as they carry it forward, we'll end up getting all the cash payments, all the share payments, and end up with a royalty and, fingers crossed, production.
Well, that sounds very promising. And just to piggyback off that question, there's activities at Radisson, Cartier, IAMGOLD, and Agregat. How do you see Globex maximizing returns from those projects?
Okay, well, IAMGOLD and Agregat are generating income for us right now. IAMGOLD have put the Fayol gold deposit into production. It's a small open pit gold deposit, and they're using it to provide material for the Westwood mill. So in December, we got our first full royalty payment of the quarterly payments that are just starting. That was $58,000. And just to show you how we make money, we bought that royalty about 10 years ago in the bankruptcy of another company. We paid $2,500 for it. So we got a check for 58. I'd say that's a pretty good return on investment. And we expect more checks coming every quarter. That's what we do. Agregat, that is a different situation, kind of interesting. We picked up the Silidor gold mine, which is in the town of Rouyn-Noranda on the north side of the town. And we picked it up originally for gold potential, but there's a company called Agregat, and they sell aggregate. So they do, among other things, they do crushing, grinding for companies like Detour Lake and so on. They were looking for a very close to town aggregate source. We showed them our material. They liked it. We did a deal based on a per ton. We got an upfront $150,000 cash payment. They've already blasted over 500,000 tons, and they're delivering. Their biggest client is Glencore. So that is going to be generating and is generating revenue for us on an ongoing basis. So those are profit generating centers for us right now. As far as Radisson and Cartier, both of those are royalty properties. Radisson are drilling. They've got a number of gold trends where they've drilled from surface down to about 350 meters to 400 in some places. They've got these trends. They're high grade, and they're following down trends. So they're spending the money. This is our model. We have a royalty. They're spending the money. They're improving the potential of the property. And if they keep improving it, it'll eventually, hopefully, fingers crossed, go to production, and we end up with getting payments constantly from that production. The same thing with Cartier. We sold a gold property a number of years ago. Cartier ended up picking it up, and now they're doing a massive drill program on those claims. We already had gold mineralization there. They're trying to increase the amount of gold and the number of gold intersections. So again, positive. End of story, theoretically. Best wishes. Yes, we go to production.
Oh, that's amazing.
I wondered how you snag your deals. Like, how many would you look at in a month? How many would you reject, and how many would you actually accept? Can you give us any idea how that might work?
The deals, it's sort of comes up. Sometimes people approach us and they say, well, look, we want a gold property, we want a nickel property, we want a dolomite property, they want something or other. So that's how some of the deals come in the door. Sometimes we look at, okay, who has properties near us, and we contact them and say, hey, you got this property, it's interesting, look at what we got, it's really interesting too. So we develop those relationships, and because we've been around, the company's been around for about 40 years, we've got a lot of long-term relationships. A lot of people know us, we know what we do as a business, and so we're constantly doing a flow. Like most of those 102 royalties are deals that were already done, where they've achieved arriving at the end of the deal. So we've got all our cash, we got all our shares, and now we're sitting with the royalty, and they're carrying the projects forward with no dilution to our shareholders. That's the big thing, is that we have, after this almost 40 years, only 55 million shares out. We've never done a rollback. Those are all original shares. And what it also does is it puts money in the treasury. So we don't have to go back to the market to try to raise money. So in cash and shares, right now we have over $20 million from those deals. So it's all to the benefit of the shareholders, which I will say is to myself because I'm the largest shareholder. Yay.
Well, I'd say that's the mother lode for shareholders, and it's extremely valuable that people understand and gets this information. So thanks for sharing that.
Jack, can you outline a bit of information on a few deals you've done? Specifically, Emperor, I think it's pronounced Sadero, 03, and the Orford deal. In other words, any deal that you're excited about.
I'm excited by all my properties. I love all my children. You know, well, listen, I wouldn't have them unless I thought they had potential. I'm not staking just for the fun of staking ground or acquiring, buying. As far as Emperor is concerned, that was a very advanced project that's on the Porcupine Death Star break. And there's already 4.17 million tons grading 5.42 grams per ton gold. That's cut, where you cut everything from an ounce down above an ounce to an ounce. And if you don't cut it, it's 6.36. So lots of ounces. That's uncut. 853,000 ounces of gold already outlined on the Porcupine Death Star break near New Parquet. So we did a deal with Emperor, and they just paid us it's a 5-year deal. They just paid us the second year payment, which was $500,000 in cash and $300,000 in shares. The total deal over the 5 years is $10 million in cash, 15 million shares, 12 million in work. And at the end, we keep a 3% gross overriding royalty. So you can see how we fill our treasury over time. They do the drilling, they spend the money, all that money that they're doing. If they do the $12 million in work, that's $12 million of shares that they had to sell in order to finance that work. And that is stuff that is not being done by us. Okay. They're taking the risk, they're taking the dilution. That happens in all of our deal. And they've been successful in the drilling. They've done a couple of drill programs, things like 5.6 meters of 7.5 grams per ton gold, 10.8 meters of 15.8 grams gold, 13.2 meters of 3.8 grams, and so on. So lots of good values. The Cerrado deal, that is we have a 1% gross royalty on a iron deposit, which is over 1 billion tons. So they're looking to try to put that into production. They just got TD Bank on board to come up with the second half of the money. They got a group out of England, a quasi-governmental agency that is putting up the first block, and TD has been hired to find the second block. So that's great. They let their name to it. That shows how serious that is. 03, that they picked up a series of gold properties from us up in the Quevillon area. We got a big whack of stock from them, over, was it $2 million worth? So we're happy with that. They do really good exploration. So we're, like I said, we're extremely happy with that. And Orford, which you mentioned, that's in the Joutel mining camp. They renewed for the second year of their option. They've already done 2 drill campaigns, hit in both of the campaigns. And just beside them, Maple optioned the Joutel mine, copper mine from us. Actually, it was the Joutel gold mine from us. And they've done 2 drill programs also, and they've hit also. So again, both of those are options generating revenue for us. That's, like I said, the way we dance.
In terms of future developments, do you have any plans or targets in place? And maybe, for example, by the end of this year, in terms of acquisitions of new royalties, what does that picture look like?
You have to wish me luck that I can actually get the deals done, because this is all a question of negotiation back and forth. And I'm a cheap SOB, and people always want to get the maximum out of us. So we'll see what happens. But we've got a couple of really interesting targets that we're in negotiations on. And we've made offers on, but we're in the, the bat each other with baseball bat part of the discussion.
Jack, I was reading about your Russian Kid gold mine project and found it pretty interesting. But tell me something. What did you find fascinating about it?
Lots of gold.
Right.
And that's a very advanced project. There's already a ramp and 3 levels. and a company called Labyrinth out of Australia has acquired it, and they're focused on production. So, and there's been some drill campaigns, things have been increased in size. It's very high grade gold intersections. We have sort of a double royalty on it. We have a 5% gross overriding royalty on the first 25,000 ounces and a 3% thereafter. I should explain what a gross overriding royalty is, because that's something we invented. You're probably familiar with a net smelter, and a net smelter is a standard in the industry. The only negative about the net smelter is when money is on the table, people get stupid. So you end up having to deal with lawyers, right? So you waste money that you could have had in your pocket for the benefit of your shareholders, giving it to lawyers. No, 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 no. I don't like that. So
It's like a divorce.
So
Yeah.
what we did is we invented a thing called the gross overriding royalty, or the GMR, gross metal royalty. And to give you an example, for example, in the Labyrinth case, if they produce 100 ounces of gold and we have a 5% gross overriding royalty, the refinery, and the final product is coming out of the refinery, if they produce 100 ounces of gold, we get 5 ounces. No deductions of any kind. No lawyers of any kind. Sorry to any lawyers listening to this, but you're out of work. You're out of work. I'm sure they'll find something else. But
Yeah.
so the idea is to make it simple, non-conflictual. And that's what it is, and it works beautifully.
One last question, Jack, before we let you go about the rest of your day. Put yourself in our shoes. We're investors.
I don't wear high heels. Sorry.
Come on.
For an investor that's looking to enter into this type of market, and we know that a lot of companies that are publicly traded, their industries are very, very different than this. So if you put yourself in our high heels, what advice would you give to an investor that's looking to potentially become a shareholder in Globex?
They should look at the model, and the model is different than most junior companies. I'd say almost all of them. If you look at junior companies, exploration companies, they're based on the following principle. They buy a property or acquire a property. They raise money in the market by selling shares. They spend the money on the property. In most cases, exploration is highly negative. Most cases, you don't find anything, or you find something that might be a little bit of interest. You don't usually hit a mine right off the top. So you have to go back. If you find nothing, you drop the property, you raise more money to buy another property, you raise more money to explore it. So basically, dilute, dilute, dilute. Okay? Or if you find something, same story. Dilute, 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 because the work requires expenditure. In our case, we make money. And we make other people take the dilution. We make other people take the risk. That's why after about 40 years, we only have 55 million shares. When you tell people usually you have 55 million shares and you've never done a rollback, most people go like, what? That's impossible in our industry. Well, we do the impossible. Okay? So they should look at the risk that you're willing to take. If you're willing to take a huge amount of risk, go buy out any one of those ones out there. And there's a fair number of really good ones. There's some crappy ones too, but there's a fair number of good ones. But understand the risk that you're taking. In us, there's risk also, but the risk is less because we have cash, like I said, over $40 million, sorry, over $20 million in cash and shares. We own all of our assets, all our properties, we own them. We have zero debt. We own real estate. This office I'm sitting in Toronto, we own. We own our office buildings where all our crews work out of in Rouyn-Noranda, our core facilities. We own that. We own land on a number of our properties. We actually bought the surface rights, so we don't have to talk to anybody about going and getting access to the ground. We do exploration on our own. We have a number of projects we'll be working on this summer. We do certain work that we think, we make judgment calls, sometimes right, sometimes wrong, about what can we do to advance a particular asset. For example, we're going to be drilling, after we do some more detailed mapping, a gold property near Rouyn-Noranda this summer. We're going to be drilling a copper project up north of Rouyn-Noranda called Lyndhurst. And we do certain other more advanced work. For example, we have a silica property on the Ontario side, east of North Bay, called the Wise Silica Project. And it's already high-grade silica, 98 to 99% or more. But the value of silica is based upon the absolute purity. When you start getting into the 99.9999, the value goes up incrementally. So we've done what's called QuemScan studies, identified the impurities. Most of the impurities are simple impurities like mica and iron oxide, which we can get out. Now we've started metallurgical test work with a metallurgical lab to see, can we get into the 99.99, maybe 9, and we end up with a project which is going to have extremely high grade silica that is going to generate a ton of money. And just to show a little bit how far we go outside the box, we have the high grade area on the side. On both sides, actually, we have large areas, millions and millions of tons of lower grade material that has a lot of mica in it. And I don't know if you're familiar with what's called Caesar stone. It was developed in Israel. If you go in your kitchens, before we used to granite and other types of rock in your kitchen for your counters. Now you can go buy like white counters, black counters, green counters. That's called Caesar stone. Basically, they take quartzite, they crush it down finely, and then they reconstitute it with special materials to give it the color and make it impermeable and make any type and shape of counter you want. So there's a big market for that. That's become basically a standard. Well, we've had tests done, a whole series of tests done on our lower grade material, and we have one company right now that wants to buy it from us. And we have a number of other companies that we're approaching about doing the same thing to make Caesar stone or the equivalent of Caesar stone. That stuff sells for about $500 a ton. It's really easy to get, and we've got millions of tons of it. So, we have a different kind of model. We'll do anything. We also have a lot of industrial minerals. We have dolomite, talc, magnesite, antimony. We want to, our final product is money. Okay, and any type of mine, well, it's true. Your final product is money. Yeah, and does anybody really care if it comes from gold or copper or dolomite or talc? You want to get the money. So that's what we work for. And that means that we'll take anything that has potential. We don't care if it's gold. We don't care if it's base metals. We don't care if it's industrial minerals or specialty metals, rare earths, doesn't matter. If we think that it has potential to eventually lead to a mine, we pick it up, we work on it to make the potential evident, and then we seek people to carry it forward and generate revenue for us. A completely different model than all the other companies out there. Yeah, I mean, basically, as population expands, as people want to build more houses, buy condos, generate more revenue, as people move more into the middle class, there's more demand for material, for housing, for automobiles, for cell phones, for computers, for anything and everything. Everything around us is mining. The road, they need aggregate for the highways. They need aggregate for the cement for the sidewalks. They need metal for the light posts. They need copper to transmit the electricity. Your house, I mean, the number of elements that go into your house and materials, it's crazy, right? And yet people don't understand how important mining is. I mean, that window you see behind me, that's silica, right? Yeah. You got to mine that. Doesn't appear out of midair, right? So all these things are important. People have to understand, and most people don't. They really don't.
Seeking the inside track on Globex? Look no further than minestalkers.com. Our cutting-edge search tool is not only designed to reveal hidden gems, but also provides real-time stock updates. Visit for the insights and stay for the gains. Seize the opportunity and explore the magic at minestalkers.com. Uncover new investment possibilities today. Don't forget to like, subscribe, and share this video. Let's get the word out there.